everyone, it is Evan here from the Trade Risk on Friday, June 15th, here with a weekend market recap video. We're going to cover all of the major markets, the current market environment, and then finish off looking at some sector analysis. So I hope you're doing well out there. I hope you had a great week trading. Let's jump into markets here with the S&P 500 cash settled market. We're looking at a weekly time frame. Each bar represents 1 week worth of trading. And if we look here at the performance of this week, you can see it was a dead flat week, up 0.02%. So essentially, we went nowhere in terms of a closing weekly bar here on the week. We did initially kind of push up. We did push down this week, but we ended up closing exactly where we opened. So in terms of last week, in terms of price action, structurally, nothing changed here this week. We are still holding above a rising 8 and 20 period exponential moving average here on the weekly chart. We are still holding above the recent breakout zone of about 2740 that we broke out from last week. And we do see us kind of holding up at the top half of last week's range. So really not a whole lot has changed or is super interesting on this chart. It's more of a wait and see type of candle. We want to see next week, do we break out of this range? Do we end up taking out this week's lows? Do we end up taking out this week's highs and challenging the pivot highs here back in March? And then, even above that, or the all-time highs back in January. So let us go down to a daily chart. Look at these levels a little more refined. And in fact, we are going to stick with the cash market here because the Spider ETF, the SPY, which everybody likes to look at, did go ex-dividend this Friday here. So this chart is showing that it is down 57 basis points here today. That is not actually the case. The dividend is skewing this to the downside. If we go back to that cash settled market, you can see we're down only 10 basis points today. So nearly flat. And again, a nice recovery off of the lows. So looking at the cash market here, what we want to point out first is this week's trading. You can see we did spend most of this week going very, very tight and sideways here in this about 10 or 12 handle range here in the S&P 500, around 2776 all the way up to nearly 2790 or so. And that was until Friday, where we did get a little bit of a push lower here, but sellers couldn't keep that pressure up. We didn't, in fact, close at these lows. We reversed and closed back into this range. The other interesting part about this week was, in terms of at least the S&P 500, was this session right here on Wednesday. So Wednesday was FOMC announcement. We got the confirmation there that the Fed was raising those Fed funds rate by 1/4 basis point. And we did get that reaction lower to finish off the day here. It closed at the dead lows of the session. And this here, again, it's a very short-term acute sort of price action analysis, but this type of bar here is something that if the sellers wanted to press, if the market was ready to really roll over here, I think it was Thursday where we would have really wanted to see that follow through lower. We would have really liked to see this close on the lows result in some type of gap down and then, lead to a bigger pullback if you were waiting for that pullback, if you are in that bear camp, but we didn't get that. We got, in fact, a gap up into this range and then again, kind of finished off the week up in this range. So the way I'm looking at this is, in the short term, we did break this trend line here. So if you wanted to use, say, the slope here over the past week or two, we are trading below it, and we're now kind of in the process of maybe trying to re-challenge it, get back above it based on Friday's candle. So I think, Monday's open will be interesting. So we are kind of below that trend line. So that does tell us that we did weaken up at least a little bit, but the 8 and 20 period moving average, they're still bullishly aligned. There is still, at this point, looking to be plenty of appetite for buying pullbacks. And as long as we are trading above 2740 or so, I have to, believe that the bulls here have the benefit of the doubt. In terms of relative performance, the NASDAQ and the Russell continue to really run away with it to the upside, and the S&P 500 and the Dow continue to lag a bit behind. So we still want to monitor breadth. Breadth is so far still kind of holding up and speaking to the bull case. And and you know, the Russell 2000 and the Qs continue to act best in class. If we go to the Russell 2000 now, you can see here continues to be extremely resilient. Hasn't closed below the 8-period EMA here for a while. We had a brief close below it back on May 29th. Otherwise, it's spent quite a number of the last many weeks here above the 8-period daily moving average here, which is again just a real kind of sign of strength and resilience. And is, you know, could it be ready for a pullback, you know, next week? Absolutely. But until we start to get more of that price weakness in place, until we actually start taking out a prior day's lows and holding below it, you know, we really need to at least respect the slow grind higher here in the Russell 2000. Finally, the NASDAQ 100, you can see here on the week, 1.46%, continuing to extend its gains to the upside. Again, has closed above the 8-period EMA here for the past couple of weeks, continues to act resilient. Good volume came in here on Friday, but still, again, holding up all things considered. So right now, we still have leadership by technology, by some of the small caps. We do, you know, arguably have a very narrow leadership here in the Qs. The bulk of these gains are coming from, you know, the Apple, the Amazon, the Netflix. We don't have, you know, a super diversified. If we look at the equal weighted Qs, we're not as kind of screaming to the upside as the market cap weighted ETF here. But for now, the market hasn't seen any major selling pressure, hasn't seen any other major signs of cracking. So I think the bull case is still intact. It's still working itself higher. Doesn't mean that the good times are permanent and here to stay. Make sure you have your stops in, you know, you have your due diligence, but for now, the song and dance continues to the upside. So that is the market environment and some key levels to sort of pay attention to. Let's get into some of the other major markets here. We'll go to TLT next, which we'll switch to the other board actually, and we'll look at a weekly chart. So TLT did get a bid this week, finished up almost 1%, 0.71%. Nice kind of recovery off of the lows here from the past 2 weeks. It is still moving sideways here in a very kind of messy range, but bulls are trying to kind of put in this higher low here in the short term perhaps. Had that nice thrust up in the second half of May, pulled back about 50%, and now trying to stabilize and sort of resume higher back to perhaps the upper end of this channel. We'll have to see if that materializes. For now, get a little structure here around 118.50 or so to trade against if you're a short-term bull here. Otherwise, you know, longer term, I think it just simply needs more time in this sideways channel. Next up, we'll go to oil. So oil really kind of rolled over here into the end of the week. Higher volume Friday broke down from what is now looking like a very clear kind of bear flag here over the past week or so of trading, a little longer than a week's worth of trading, but we did get this kind of nice you know, this nice flag higher here after this impulse leg lower throughout the second half of May. We flagged up, and now we're starting to break down on heavier volume. So short-term structurally here, this does look pretty vulnerable. Looks like sellers are kind of back in control, declining moving averages above price. It's not the prettiest place to be. However, the weekly chart, the intermediate term chart, you know, you could argue that there's some longer term, maybe trend support coming in right around this $13. Either way, I do think it's a bit of an inflection point, kind of a battleground, and we'll need to see if it can be defended next week. But short-term momentum here to the downside, I would not want, you know, not my style to be trying to buy anything right here. I'd like to see more stabilization for USO to prove itself and to watch to see if there's more follow through next week. So that was oil. Next up is natural gas, and it's really the opposite picture here. So we got a breakout to the upside here in natural gas on Friday, 4.38% on the week, and you can see it is resolving this multi-week range to the upside here. So more signs of improvement from natural gas. It has been, you know, bottoming out, or it did appear to be bottoming out here back in February, March, April, May, and it is starting to kind of reap the rewards and get that lift to the upside here. So bulls kind of reclaiming, getting another kind of authoritative move higher here in natural gas. So good developments there for the bulls. And Metals next. If we look at GLD, for example, this one here getting hammered on Friday, 1.65%. Very high volume coming in here, and it's breaking down from this consolidation that it was in for about a month, almost a month's worth of trading, moving sideways, nice and tight, kind of hugging this longer term trend line, but still holding below the multi-month support that it broke down from in May. And now we got a second kind of breakdown move to the downside. The weekly chart really looking, in trouble at this point now, really kind of confirming this to the downside. Maybe it's some type of capitulation move, some final washout here, but again, very similar to oil here. It's not my style to be trying to buy anything now. I want to see that stabilization. I'd rather see proof that the buyers can reverse this quickly, get us back above 123. As I've said, in all the past couple of weeks here, I really just wanted to see gold prove itself above 124, 124.50. It never ended up proving itself. It never ended up getting that confirmation higher. And now here we are breaking down again. So sellers seem to be in control here for gold, and silver, absolutely the same thing here on Friday. Came screeching to a halt here. It had a nice move to the upside at the tail end of last week and early this week. We bought some silver here on Monday of this week as it started to resolve this sideways channel higher, and it gave it all back and then broke back into this old sideways range. Ton of volume coming in, so we stopped out of our position and no longer in this right now. I would like to see and wait for the dust to settle, and again, another move above $15.90, above $16, and that would be interesting to me. But for now, given the volume, given the move back into this sideways range here and the loss of this resistance, I don't see any reason in the short term to be that excited about silver. Maybe, again, this is some type of capitulation washout here, but structurally, the timing wise, for a breakout or momentum, that has certainly reversed and come to a halt here given the close. So that is all of the major markets. Let's jump into the sector analysis here. So let's take a look at what sectors performed, top three, bottom three. If we sort this by the 5-day performance, what we see here on the top performing sector in the market now is XLY. This is discretionary, and if we recall from last week's video, I believe this was the top performing last week. It did get this nice expansion higher, this breakout bar to new highs, and it is continuing that this week. It is arguably pretty extended here in even the weekly time frame. It's pretty stretched away from the fast moving averages, but still acting well, dominating, and really seeing that rotation. You can probably thank Amazon for a lot of this, but XLY discretionary ETF is really just running away with it to the upside. Tough to buy it here. It is, overbought arguably, but certainly wouldn't want to be trying to short that train either. XLU, number 2 on the list of top performers this week. This is a crucial sort of hold given the fact that, it is pretty dicey here in XLU. It had this potential kind of weekly bear flag formation growing as we started to break down from it. Then we get a little recovery. Then we start to break down again. And now here we are recovering again. So this $49 level of $48.50 or so, this seems to be where some buyers are stepping in, where sellers are failing to take us below. So this is a pretty important level, it looks like, on this horizontal scale, and it is a nice improvement here. I think weekly time frame is still in a rough shape. XLU structurally here still has plenty of work to do, but a nice rebound today or this week nonetheless. And then finally, Staples. So for a fairly sort of defensive theme on number 2 and 3. Staples saw a 1.4% move higher. Nice kind of follow through to last week's strong performance. So again, Staples utilities getting a little mean reversion, getting a little love there, and much needed and at a much important time for both areas of the market. Finally, now on the downside, XLE, so energy, to the worst performing sector of the week, down 3.55%. Go down to that daily chart here, real ugly candle on Friday. Not a tremendous amount of volume given the type of move it was. Still, slightly above average, but this breakaway gap to the downside, or, we would only know that in hindsight, but this real gap and go, I should say, this gap lower, and then that proved to be about the highs of the day. We continue to sink lower. So for me, XLE is kind of in that do not touch zone. Remember, we did rally all the way up just a few weeks ago above the January high. So we made new highs on the year, then we quickly rejected them. We had this steep pullback. We did start to do the work to recover, but now we have this potential sort of lower high scenario in play. And we do have all of this supply now up here that recently just traded above us. So for me, again, I would not want to be jumping in bravely dip buying this. I'd rather see consolidation and let this market move sideways and prove itself. Otherwise, let's look at the lows here made just a few weeks ago back in end of May to see if they can hold this time around. Second worst performer here is financials, and financials have been kind of the underdog for a while. They've been the underperformer for a while this year. And this market, this sector of the market still just kind of looks pretty messy, all things considered. At best, we could say this is just moving sideways and consolidating. I think that is kind of the best case scenario for financials, and perhaps that is the path it will take. Maybe the next 3 months, 4 months, it's just spends moving sideways in a few point range. But the more bear case, the more skeptical part of participants are going to look at this as the area of the market that might start to drag others down. Whereas if we start to see a bigger pullback, if we start to see a correction, financials will lead the way to the downside. It certainly seems like that from a price structure perspective, but until we start to get a breakdown of 26.75 or so and lose these recent lows, then like I say, at best we could assume it's just moving sideways here. So pretty much messy all around there in financials. And then materials gave back 1.81% this week. Again, a pretty ugly session here on Friday. We saw this gap down and then continued to sort of make new lows. Volume increased, and we could say that we still have kind of this uptrend, this structure in place from early May, where it's been kind of ebbing and flowing in here, and we got this kind of channel we're working with, or maybe it's a little more of a wedge, however you want to draw your lines and look at price structure here. But arguably, it's just still looks like it's in kind of no man's land here, and these stocks in general did take a bit of a beating, especially here on Friday. So that is the market recap for this week, for the 15th of June. Thank you so much, as always, for watching. If you do like the videos, do subscribe to us on YouTube. Keeps you up to date with all of the latest that we put out every single week. So with that, have a great weekend. Thanks again for watching, and I will talk to you next week.